Hi, in this video I'll be sharing with you how you can buy low and sell high even as a beginner forex trader. Trading is all about making money, but there are zones and there are rules that you can follow in order to have a high profitable trading experience, and that is one of those things I'll be sharing with you in this video. When it comes to business, many a times when price, the law of demand says when price is low, you buy, and when price is high, you sell. That is what supply and demand is all about. So you want to buy low so that when you buy cheap and then you sell when price is high. In this video, I'll be sharing with you exactly how you can buy low and sell high using the combination of the RSI and the CCI, which is our Commodity Channel Index. So here again is the setting of this indicator. These are moving average, the period is 20, the method is exponential. You can apply it to close. Then we have our Relative Strength Index. You can see the setting. Please change this color to your background. If your background is black, change it to black. Then we have our Commodity Channel Index. So once you've done the setting carefully, here is how we apply this strategy to our trading. So how exactly do we do this? Remember, first we begin by determining the trend of the market. The trend is always your friend. You should be selling when price is selling. Since you are not the market mover, you don't need to do what is against the move of the market. So we determine the trend. So in this scenario, we are having what? A lower high. This is a lower low. This is a lower high. This is a lower low. This is a lower high. And we are having this formation that we have yet to define if it is a lower low or a lower high. But presently, we are seeing prices in a downtrend. And if you are to use your trend line, obviously you realize that we are in a typical downtrend. Okay, and if you are to use your indicator, when price is in a strong trend, it will respect the 20 period moving average. And as you can see, price is currently trending below the 20 period moving average. So this moving average, you can see that price is trending below it. So we are in a downtrend. We have identified what our trend is. Now the next thing is we now pay attention to our indicator window. This is our indicator window. So how do we pay attention to this? Once we have identified the trend, we need to identify what our point of interest. Our point of interest are those zones we are expecting price to come in order for us to sell or to buy. So now we are in a downtrend. So our point of interest has structural points. So here is our lower high. So we have this point of interest here. This is one of our other block. So it is a typical point of interest. So now what do we see? We're patient enough. We want price has come down. So price now pull back to our point of interest. You can see this candle retest it. This point of interest as well can be your area of resistance or your support zone. So price has pulled back and retest it. When price come in, we need a sell confirmation trigger. That sell confirmation trigger can be price closing below the moving average 20 or a candlestick pattern. So here we have what? We have a bearish pin bar candlestick pattern as our sell confirmation entry. Let me zoom out a little so you can see this obviously. Yeah. So we have this what? We have this bearish candlestick pattern as our sell confirmation entry. So if you are using your candlestick, this is your sell confirmation entry. Now then, and if you are using a bearish engulfing candle, here is a bearish engulfing candle confirmation entry. And if you are using a break of trend line, this is actually a bearish flag pattern. So all of these are different confluence for your confirmation. So you do what? Price break out of it, break, retest it, and continue to the downside. Now, how do we verify this is a downtrend? It means that we are selling. How do we confirm that this selling, we are selling high? That is when the CCI come into play. So what do we want to see? To verify that we are selling high, we want to see the CCI line to be around the 80 and 90 region. And since here it is at the 80 and 90 region, and we are in a downtrend, and price pull back to our area of resistance, our area of support, or our order block, or a fair value gap, whatever your point of interest is, or a pullback to the moving average, then this becomes our area of what? Of premium zone. So we are going to sell. This is our premium zone, so we sell from this zone once price get to 90. This concept is different from trading overbought and oversold zone. This is based on different reason. This is in line with the trend. We are not catching reversal. It must be in line with the trend. It must be in a point of interest. You need additional candlestick confirmation before you now consider finally if you are buying low or you are selling high. Now, if you look at presently, price is here. Price is here at the level of 20 and 10. And then look at here, we have this pin bar candle. But are we going to buy? No, because we are not just buying low. We will buy if it is an uptrend and this is a pullback. That is only when we are buying. But in this case, this is a downtrend, so no trade here. Okay, so this is exactly how we can take advantage of this strategy. Highly effective and very, very profitable. You can do this on any pair of your choice. Let's look at gold and see exactly how we can apply this. Gold has been on a bearish trend, so this is a downtrend. Okay, now look at exactly what we are having here. Look at this. Price is giving us this, right? And we are even having a divergence here. So what do we want to see? Bearish engulfing candle. So this is one of our sell entry confirmation. Price is at the level of 90, right? But the question is price in our point of interest? It must be in our point of interest for us to make a sell. Is price in our point of interest? Not really. We don't have any visible point of resistance here. So we should be considering here if we want to look at point of interest. Our point of interest should be here. Okay, that is the point of interest that we have, and price has not retested our point of interest. So this is not valid until price push to this zone, and then we have that confirmation for us to sell. However, if we had a break of trend line, pick your trend line, you can see this. If this price break out of this trend line to the downside, and this is at this zone, then it is a good avenue to sell. Or if the price close below this moving average, then it becomes a good opportunity to sell. And I believe you have learned something new. Let's look for an uptrend so we can illustrate this. We need to illustrate this perfectly so that we can take advantage of this. Look at boom 1000. I'm trying to get a trade that is presently in an uptrend. Okay, so yeah, this is volatility 50, and volatility 50 is in an uptrend, just as you can see. So we can use this to make an illustration. Look at what happened here. This is a higher high, higher low. We have a new higher high. So but do we have a trade here following this strategy, we don't have a trade here. Why? To have a trade, this should be able to come to the level of 20 and 10, and then we will now buy from this zone with this confirmation. So presently we are having a sort of a hammer formation, but this is here to pull down to our level of 20. If it comes to 20 and it gives us a hammer confirmation, because remember, here is our point of interest. This is a higher low. So this is another block. This is a resistance zone. You can see that the candle, the pin bar is forming from that zone, is closing above the moving average. But if we did not get, this has to come here in order for us to buy to the upside. So this is exactly how you can buy high and sell low using this strategy. Thank you for watching. Please don't forget to like, share, subscribe, and turn on your notification bell. See you in the subsequent video.